Thank you for joining me. I'm Juan Lee, trader and founder of Prosperity Trade. In this quick short video, I just want to do my weekly watch list. You're going to want to watch this video. I'm keeping it kind of short, and usually I don't have a large weekly watch list. My day trading style, I usually do a pre-market watch list, build from there, and I'll just have a few stocks that I think are going to get some attention based on the previous week. But with day trading, it's so volatile that anything can pop up in your scanner and you can trade something totally different that you weren't intending to trade. But the first stock I'm looking at is PETZ, P-E-T-Z. It's been spiking up lately. It's had a lot of hype, and it looks like it's kind of forming a bull flag. If you look here, first point of support based off of volume is there's a lot of volume here at 466. So if it ever dropped down to this area, this would be a good area that you can see some possible support. A bull flag play is a little bit different. With the bull flag, what we're looking at is we're looking at this top here and this bottom here. And you see kind of that's what the bull flag would be. If you're going to put this on the watch list, what you would want to see is a candle breaking above the previous candle. The next candle, for example, you would want to see it close above the previous candle, and that would be your entry. Now, your exit would be the low here, the low of the bull flag. If you put this on your watch list, just watch for a bullish candle. So you want to see a candle that opens up above the previous candle and possibly a bullish type signal candle. And that would be your entry point, and your exit strategy would be below the low of the lowest candle in the bull flag, so around this here, the 530 540 area, and you would want us to take your first profit, I would say around 748, this candle here, take partial profit there with the goal of getting up to the high of the bull flag, 920. But this is more, I guess, like on a swing trade process. If you were going to play a swing trade, if you're going to follow it on a day trade, you kind of want to see this channel form down here, 576 down to up to 650, and you would want to see it hold this channel. And if that channel is able to hold, then the break of the channel would be your entry. So that's the first stock. You want to, if you're going to day trade it, you want to see it hold that channel. The swing trade you can put on the longer term. And the second stock is RIVN. It's a new SPAC. I still believe it's going to get a lot of hype. And for this one, if you're going to day trade, I'm looking at 119 as pretty strong support. And I know that's kind of way down here. I don't want to play it up this high. If you're going to play this stock, I would like to see it come all the way down to this 119.43 area, this white line here. I think there's a lot of support there. These two lines are some more possible support, but they're not as strong as the 119.43 area. If it continues to just spike and it leaves without us, then that's fine. But it's just spiked up way too much for me. For me to even consider this stock, it can go, break 135 and it can go up forever. That's fine. That's what the least likely probability is, but it is possible. The thing with day trade, you just want to put as many things in your favor, since it's already such a high risk trying to day trade. I would love to see it crash, sell off, and get all the way down to this level here of 119.43. If that happens, if it gets down to this the level of 119.43, I need to see 119.43 hold. And if that's able to hold, then I can, you can see a nice little bounce and reverse back up to these levels here of 122, 124, and potentially back to 128 area. If 119 doesn't hold, then next support is 114.44, and then 108 area is also support. That's kind of like day trading. If you have something on your watch list, just have a plan. Now, if it leaves without me, then I'm not making money, but I'm not losing money. But if it drops down all the way to 119, which seems far away, that's a better position and a higher probability of bouncing off that level. If that level holds, then trying to buy it as soon as the market opens at 135. Because there's going to be a lot of people that are going to wait up 4 in the morning and try to buy it at this price, and it might get a little spike. than just crash. If it crashes, then just see if it makes it down. Now, let's say it goes down to 121 and it doesn't get to your level, and then it reverses at 121 and goes to 150, then you missed out. Then you missed out, and you have to learn to live with that. You know, one thing with day trading, you cannot survive with FOMO. You know, if you have FOMO in day trading, you're just not going to survive. I've been day trading for 10 years. I've day traded with some of the best day traders, and I've learned a lot from them. I learned what to do, what not to do. But I've had the opportunity to coach other day traders and just give them advice on the side. And they've always looked to me for advice. And I've been able to help out a lot of day traders. But I've also seen a lot of day traders' biggest mistakes. And they try to follow a lot of these momentum traders. And it's just not easy to do. The best thing to do is have a plan, have a strategy. Don't get into the trying to find the highest point and find the best entry. You know, you're never going to perfectly time any day trade. And don't give into FOMO. Don't feel bad that you missed out. Don't feel that, hey, you know, this is my plan. Look, I have my plan here, 119.43. I will set alerts. If it reaches down there, then I'll look to see if it's a trade. And if it may get, you know, I've had support areas before where it's off like by 75 cents. Like, let's say this drops to 120 and I don't get to see it. And then it bounces off at 120 and it goes to 2,000. I'll get over it and I'll learn to get over it. And I know in my head that, you know, my experience that you're going to miss those sometimes. And it's going to be a time, and it's also possible that I get into 1943 and I say, okay, let me take a small shot, and it drops, and, you know, I get stopped out. And then let's say I get stopped out, I sell, and then it reverses and it goes to 130. That's also going to happen. But you have to learn to live with that, because there are going to be people that don't have a plan and think that 135 is a good entry, and then it drops to 120 and they lose $15, as opposed to me getting in at 119.43 and I have a tight loss because it's already dropped so much. And I know that if that doesn't hold, it has the potential of dropping all the way down to 112 or 118. So I get in 119.43, it doesn't hold, and it drops 40 cents, 30 cents, and I get out, you know, at 119.43, maybe 100 shares. So if it drops 40 cents, I've lost $40. And if my plan works and it bounces off of 119.43 and it goes up $10, $20, then I made $1,000, $2,000. So I'm risking $50, $100 with potential of making $500 to $1,000. Those odds are pretty good, as opposed to someone 135 and it drops $15. They've lost quite a lot. So that's what day trading is. FOMO, it's having a plan and sticking to it. And that plan has to be based off of some sort of strategy that gives you the best probability. So you get into don't just get in because I feel like this is a good plan. No, you're getting in because, my plan is I picked 119.43. It's not random. It's a pivot point. It's an area where there's a lot of volume, right? It's an area where it's bounced off and tested it several times. This doesn't have a lot of history, this chart, but just a little history that it has. It's shown that in that area, it's bounced off quite a bit. There's some support there. There's people that whenever it drops to that price, people are willing to buy it. So there's some sort of plan. So that's all you have. That's what you should do when you day trade. But for me, I'm more than likely tomorrow I will day trade live, build a pre-market watch list, and trade for the first hour. And if any of these things hit my alert, they hit my alert. Or if any of my pre-market watch list alert is set off, then I'll trade that. And that's it. So make sure you follow me, subscribe, comment. That way you can get notified when I go live. And see you in the next video. Thank you for watching.